Trump pressures bill to get stuck. The macro situation is unclear, but the chain is stable. Bitcoin is likely to break 130,000. Moving old wallet Galaxy takes over the large-scale movement of 80,000 Bitcoins. Is it a layout or a retreat? From fat penguins to the darlings of Wall Street, can NFT really open the door to mainstream finance through ETFs? A sure win. 60 Ripple is still eyeing Mica. Is this a big game for Ripple? Unlicensed transactions will cost you 8 years on a sewing machine. Hungary's crypto regulation is really harsh.
Wednesday, July 15th, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour data headlines in the coin circle. The US June CPI released in July was higher than market expectations, up 2.7% year-on-year and 0.3% month-on-month. The core CPI increased by 2.9% year-on-year, indicating that inflation is still quite stubborn and it is not easy for the Federal Reserve to release money in the short term. CME's Fed Watch shows that the interest rate will basically remain unchanged in July, with a probability of up to 97.9%, and the probability of a 25 basis point rate cut in September is only 50-50. The market is still quite entangled in the matter of rate cuts, and the attitude has become more cautious. In this context, Bitcoin has failed to hit $120,000 twice and is now hovering between $110,000 and $120,000. Although the on-chain data is still stable and ETF funds continue to flow in, the uncertainty on the macro side does make the bulls shrink a little. In the short term, Bitcoin will most likely continue to fluctuate around macro data, and we must be wary of the risk of a pullback caused by unexpected negative news. In the medium term, you can consider buying at a low price, but you must be careful to control the pace. If it falls below $110,000 and the volume increases, you may have to be careful of deeper adjustments. On the other hand, if core inflation goes down and the Fed softens its attitude, Bitcoin may have another opportunity to break upward. Recently, the US has been very nervous about the crypto legislation. Yesterday, the House of Representatives failed to pass the procedural vote, and the differences were quite large. It is said that Trump is very unhappy and is communicating with the opposition. The Speaker plans to vote again on Wednesday. The bill mainly governs securities supervision, stablecoins, and exchange responsibilities, which may make the market more worried in the short term, especially US trading platforms and stablecoin companies. Against this background, the BitVol index rose to about 38.7, slightly higher than the beginning of the month, indicating that the market's expectations for future volatility of Bitcoin have increased. As the fear index of the currency circle, BitVol rose from 50 to 70, indicating an increase in risk sentiment. From 60 to 40, the market is more optimistic. At present, it remains at a medium-low level. Although the market is cautious, it has not yet panicked. At the same time, the US Department of Justice ended its investigation into Polymarket, sending a signal that the supervision of blockchain-related applications is easing and also suggesting that some crypto-native projects are turning positive. In contrast, the UK is moving very fast. The Ministry of Finance will support DLT, asset tokenization, digital securities sandbox, and promote the implementation of stablecoins and digital payments. The relevant bills were issued as early as April. Overall, the United States is still in a tug-of-war, causing market fluctuations in the short term, while the United Kingdom, Singapore, and other places are actively sprinting and are expected to become future crypto compliance test fields. As of yesterday, CryptoQuant data showed that the price of Bitcoin broke through to a new high of about $117,800. But what is interesting is that the short-term activity indicator, the proportion of UTXOs held for 1 to 1 week, is only 5.03%, which is much lower than the two high points in 2024. Simply put, The realized cap age bands indicator is to see who is doing short-term operations. At the peak of the bull market, short-term players usually surge and sell frantically, causing the short-term share to soar. But this time the short-term activity did not rise like a rocket, indicating that the market has not yet reached the point of overheated speculation. Unlike the correction in early 2024, this round of growth is considered to be steady and steady, laying the foundation for the subsequent continued rise. For medium and long-term investors, the current situation is actually quite friendly. It has risen a lot, but it is not afraid of heights. If the short-term activity continues to be calm, coupled with the entry of ETF funds and macro interest rate expectations, Bitcoin may be able to try the highs of more than $130,000. On-chain data shows that the market is far from overheating, speculative sentiment is low, and coupled with a steady price trend, this wave of growth may be the beginning of a new major uptrend. Please like and follow us to sort out the latest developments in the currency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can receive the member wealth password from Monday to Friday. In July, the Bitcoin Spot ETF is really strong. It has attracted more than $1 billion for 2 consecutive weeks. The cumulative inflow this year has exceeded $28 billion. The largest funder is BlackRock. Looking at the supply side, only 450 bitcoins are produced per day after the halving. Long-term large investors hold about 75% of the circulation, resulting in less and less inventory in the exchange, and the market is almost drained. Interestingly, Google search popularity and encryption app downloads are now only about half of the end of last year, indicating that this wave of Bitcoin market is mainly supported by institutions and retail investors are still watching. What made the market even more excited was that in early July this year, an old wallet that had been dormant for 14 years suddenly woke up and transferred out about 8,000 bitcoins in a single transaction, which was worth about $868 million at the market price at that time, setting a record for the largest transfer of OG wallets in recent years in the Satoshi era. Everyone is curious. Who is this mysterious big player? Is he preparing to sell off the coins?
Data shows that these 80,000 bitcoins came from 8 addresses in 2011 and were transferred to new wallets and institutions in batches. Among them, 16,843 bitcoins, about $2 billion, flowed into Galaxy Digital on the 5th, causing the market to speculate whether the whales were planning to sell. Unlike the previous whales movements, the last transfer of 3,157 bitcoins to Galaxy Digital did not cause drastic market fluctuations, indicating that the market was not panicking. On the other hand, large amounts of bitcoins may also be completed through over-the-counter transactions, which may not necessarily affect the secondary market.
I think that Wall Street's full undivided attention now is on Bitcoin. And really, there's 3 things that drove this move. The first is that there's been record inflows into the ETFs. So last Thursday, 1.2 billion, second highest day. Those ETFs now collectively have over 140 billion. BlackRock's fund is now almost $90 billion. Second thing is the options expired at the end of Q2. And so all that downward pressure on Bitcoin obviously goes away. That helps kind of like a beach ball getting put underneath the water, right? Obviously. The third thing is that there was a lot of short sellers. And you started to see that build up. And as they got blown out, as Bitcoin ran.
Although everyone has different opinions, such a large amount of Bitcoin is enough for this mysterious whale to squeeze into the top 200 of the world's richest list. No wonder the market is full of speculation. Bitcoin has indeed risen quite a lot recently, but I still have to pour some cold water. Even in the bull market in history, there is often a 20% to 30% correction, which is really no joke. So don't just be optimistic. It's best to keep an eye on the support area of 112,000 to 115,000 US dollars, as well as the inflow of ETF funds to see whether the bulls are strong enough. This also explains why retail investors have not dared to rush into the market. After all, those old leaks who have been in the market for several years, if they want to be ignited by FOMO again, I am afraid they will have to rely on a longer rising market to get excited. Recently, Fat Penguin Pudgy Penguins has become popular again, causing Coinbase, OpenSea, VanEck, MoonPay, OKX, Jupiter, and other crypto circle bigwigs to change their official profile pictures to the secondary images of fat penguins on the X platform, which seems to have set off a wave of collective head changing. In fact, this is not the first time. As early as the end of December 2024, Pudgy Penguins made a big airdrop to the community. Anatoly Yakovenko, Toli, the co-founder of OpenSea and Solana and Binance.US, were the first to change their profile pictures to this group of cute fat penguins. It can be seen that this series is not only cute, but also has become a cultural symbol of the crypto circle.
As of July this year, the number of Pudgy Penguins viewers worldwide has reached 87.4 million and is expected to exceed 100 million by the end of the year. CBOE BZX Exchange has submitted the 19B4 document of Canary Pengu ETF to the US SEC. The ETF will directly hold Pudgy Penguins' ecological assets. Driven by this, the market sentiment of Pudgy Penguins has warmed up, and ecological assets have risen simultaneously. The floor price of Pudgy Penguins NFT has risen to 14.19 ETH, a 6-month high. The token Pengu price has reached 3 cents, a surge of 192.7% in the past 30 days.
If it passes the review smoothly in the future, Pengu will become the first ETF in the United States to directly hold meme or NFT, which will not only break the traditional boundaries, but also may become the core target of mainstream investment portfolios. However, the ambition of the Fat Penguin goes far beyond this. As early as June 2024, the traditional financial giant VanEck changed its social media avatar to Pudgy Penguins in a high-profile manner just because the boss said, "Too cute, it's impossible not to change it." Okay. On the surface, it seems to be playing with memes and selling cuteness, but in fact, it exposes that traditional finance has long been eyeing the new world of crypto-native IP. Unlike those NFTs that rely on temporary hot money hype and eventually end hastily, Pudgy Penguins can survive against the trend after the NFT bear market in 2022, not by luck, but by precise strategic layout, strong operational capabilities, and super talent for storytelling. With their cute image, they not only survived, but also upgraded themselves from avatar JPG to brand symbols through IP licensing and commercial landing, giving the market a lesson in crypto long-termism. Today, not only people in the circle, but even Wall Street is lining up to pay for these fat penguins.
From California consultant to EU clearance, can Ripple really influence the crypto landscape? From high taxes to jail time, will Hungary's new crypto regulations drive away more giants?
Ripple has been so busy lately. On one hand, it is working as an efficiency consultant for the California government with Coinbase and MoonPay. And on the other hand, it is flying to Europe to develop the market, which makes it look like a government enterprise all-inclusive. Speaking of politics, California recently launched a California Breakthrough Plan, which directly invited Ripple, Coinbase, MoonPay, and other crypto circles to help with only one goal: to make the government stop procrastinating and departments stop doing their own things. To be honest, it is really promising to make blockchain play its power and solve the long-standing problems of low efficiency and lack of transparency.
According to U.S. media reports, this working group held its first meeting at Ripple's San Francisco headquarters on June 6. In addition to several crypto companies, executives from Instacart, Snapchat, and Dural Technologies and angel investor Ron Conway also participated. This wave of strong lineup may bring major breakthroughs. It is worth noting that the United States is currently debating digital asset regulation. The House Rules Committee has begun to review the Anti-CBDC Surveillance State Act, the Digital Asset Market Clarity Act, and the Genius Act this week.
We can participate in this market given our institutional background, given the fact that we've leaned into compliance and been very regulated. We have over 60 global licenses to participate in these markets. So we feel like the growth ahead will serve us well as we continue to serve that institutional client.
In addition to helping the government with technology, Ripple has also recently accelerated its pace to enter Europe. Recently, it has also said that it wants to apply for a MiCA license. In fact, as early as the end of April this year, Ripple had already gone to Luxembourg to register Ripple Payments Europe SA. As a result, on Tuesday, the industry media Ledger Insights broke the news that Ripple had applied for an electronic money institution license in Luxembourg. However, Ripple was quite calm about the news, neither admitting nor denying it, and only replied that there is no new news at present. Now the circle is guessing that if Ripple really gets the MiCA license, will it make a big move in the EU and even bring its own stablecoin RLUSD over? Everyone is waiting to see the show. In the past few years, Hungary has been wavering on cryptocurrencies. It is open but lacks clear supervision. It is prudent but has not banned it. In the early days, crypto income was subject to a capital gains tax of up to 30.5%, which almost discouraged retail investors. It was not until 2022 that it was reduced to 15%, which was a slight relief. The regulatory agency, the National Bank of Hungary, MNB, has been shorting cryptocurrencies, warning of high volatility and high risks, but has not come up with a systematic regulatory approach. Now, with the implementation of the EU MiCA regulations, Hungary has finally tightened its purse strings and introduced a new law in 2025 to sentence unauthorized crypto transactions to up to 8 years in prison. It's really a ruthless move.
The revised Hungarian criminal code stipulates that if an individual buys and sells cryptocurrencies on an unlicensed exchange, the transaction amount is between approximately $14,500 and $145,000, and the maximum sentence is 2 years in prison. If the amount is between $145,000 and $1,449,000, the sentence is increased to 3 years. If it exceeds $1,449,000, the maximum sentence is 5 years. Platforms that provide crypto trading services without obtaining a license will be subject to heavier penalties. If the transaction amount does not exceed $145,000, the maximum sentence is 3 years. If it reaches $1,449,000, the sentence is increased to 5 years. If it exceeds $1,449,000, the maximum sentence is 8 years in prison.
According to local media reports, although Hungary has put the new encryption law into effect, the Supervisory Authority for Regulatory Affairs said that it will take another 60 days to write a compliance framework. Now there is not even an operating guide, which has confused a number of encryption companies. This chaos directly affected the British financial technology giant Revolut. At the beginning of this month, Revolut simply suspended all encryption business in Hungary. All users were anxious, even withdrawals were stuck, and business could not be done. A lot of people on the internet complained that the new regulations were terrible. As a result, on Monday this week, Revolut finally gave in and allowed everyone to withdraw money, but other services have not been restored. Moreover, their EU department is now desperately applying for an EU encryption license. It seems that they want to bypass the chaos in Hungary first and keep their own market.
According to Protos, Coinbase spends more than $6 million a year to protect the safety of CEO Brian Armstrong, equipped with equipment such as X-ray scanners. Crypto Week on social media and said he would promote legislation to make the United States a leader in the digital asset field, calling on the Republican Party to support bills such as digital assets, Genius, and Clarity. According to CoinDesk, 5 listed companies around the world recently disclosed that they had increased their holdings of Bitcoin. Among them, Metaplanet Incorporated purchased 1.5 billion Bitcoins in a single day, 797 Bitcoins becoming the largest buyer. Tether CEO Paul Ardoino posted on the X platform that in the second quarter of 2025, Tether already holds more than $127 billion in U.S. Treasury bonds. According to market news, during Trump's administration, the U.S. Department of Justice officially ended its investigation into the prediction market platform Polymarket, clearing potential obstacles for the platform's compliance and development in the United States.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.